Enchanté.
Pen Trends is a podcast series dedicated to trends and news in the finance sector. It's launched by SBS, and the series features experts discussing hot topics in the industry. Today, I have the pleasure of welcoming Alexandre Eich Gozzi, Head of Innovation at SBS. Welcome, Alexandre.
Thank you, Maya.
Thank you for joining us today. So our topic today is, do cryptocurrencies have a future or are they a passing trend? Despite the uncertainties, the interest in crypto is certainly growing. And even according to one of the studies that we did, the DBX study, a quarter of the people that were surveyed, and there were 12,000 people surveyed over many different countries, have already invested in cryptocurrencies. So let's talk today a little bit about what cryptocurrencies are, how they work, what the trends are, and any other interesting things you can tell us about the industry. But before we get into that, I would like you to tell me, Alexandre, how did you get here? How did all of this start? What was kind of the factors that that led you into this industry?
Yeah, thanks, Maya. So basically, I started with crypto 12 years ago. I was still a student in my student room, and I was pretty much trying to find some stuff on the internet.
Mm-hmm.
And I stumbled across Bitcoin, and I thought, oh, this is a revolutionizing technology. It's something that's going to impact the future. So I decided to start investing, digging a bit deeper into the space. And when I started my career at Soprasteria in 2015, basically I built the blockchain practice at Soprasteria. I've held the position for a few years, and I left Soprasteria early 2022 to join an American scale-up, which is called Chainalysis, and they focus purely on crypto. They do regulation, conformity, and anything related to AML in the crypto space. I came back 7 months ago as head of innovation for Sopra Banking Software.
Okay, great. So can you tell us a little, or can you actually define maybe cryptocurrency for us, for all of the novices out there that would like a nice, succinct definition? What is it?
So a lot of people say cryptocurrency, crypto assets, you've got different ways. And my favorite is crypto assets because in my opinion, it's not really a currency. It's not money as the central banks, or as it would be basically described. But I think it's still an interesting asset that any investor should have in his portfolio, even if it's pretty limited. Cryptocurrencies have been created in 2009 by Satoshi Nakamoto. He's the inventor of Bitcoin. We don't know who he is until today. But nevertheless, what he launched is a very powerful technology that allows anyone on Earth to send, receive cryptocurrencies. And it really started as something very small, but through the power of internet, it grew to what it is today, 500 million people owning cryptocurrencies. And I would say that if you look at it from a technology standpoint, it's something that's open, that anyone can jump into at any point when he wants. It's a technology that allows transfer of value between different people, and making sure that this value is kept safe and is transacted in a safe and efficient way. So it's both a protocol and a currency, or at least an asset that can be traded. And now there's like 6,000, 60,000, I don't know, I don't follow anymore, a number of cryptocurrencies around the world.
Okay. Can you give us some examples? Because you mentioned assets, so different kinds, I suppose. And then you also mentioned that they have a value. So what kinds of things are we looking at that can be classified as cryptocurrencies?
Yeah. So the biggest one is Bitcoin. It's considered as a digital gold, kind of an asset. And through time, if you look at the returns, it has impressive returns. When Bitcoin is worth around 65,000 as we speak, it's grown from a few cents to there in the last 15 years. But then you have some big competitors or big contenders that offer a different aspect. Like as Bitcoin is gold, you've got Ethereum that wants to be kind of the processing layer, the kind of smart, and they used the terminology and they invented what we call smart contracts that basically allow you to add some business logic to a cryptocurrency and to the protocol beneath it. So it allows a vast number of use cases that goes from NFT to decentralized finance, and it brings additional value to what is a very good way of storing and transacting value.
Okay. And right now, today, who are the people and in what regions are we seeing the use of cryptocurrency?
So it's funny because in the end, the US is one of the places where crypto is pretty much adopted, but it's also one of the regions where they haven't regulated it, let's say. In Europe, as you know, we love regulating things first, and then we basically decide to build business. It's a Wild West, but it's working because now you've got huge companies in the US that are leaders in this field. The same, we did on internet, and basically the US has built giants and kind of doing the same thing. But I think regulation is coming pretty fast. But let's not speak too much about regulation now. But you also see grassroots adoption in lots of different countries. It can be in Africa, it can be in Asia. Asia has been pushing really hard, and you would never expect it, but Vietnam is one of the biggest crypto countries in the world.
Okay.
But you also have Nigeria, for example, that just recently started legitimizing the cryptocurrency for the country, and but Europe is pretty good.
Okay. And do we see differences in the way that people are thinking about it and using it in those different regions?
Yeah. It's in some regions, it's for remittance purposes. It's also because of inflation and high inflation in some countries. It's also a good way of maintaining value in order to make sure your money is safe. When you have countries where the inflation rate is higher than 100% or even higher than 20%, having an asset that isn't correlated to your own financial market or to external financial market is an asset that people are looking for.
Okay. And just in terms of some of the countries that you just mentioned, like Vietnam and Nigeria, can you tell me a little bit about the link between, say, financial inclusion and the use of cryptocurrency?
So I would say that this is one of the, as of today, not realized promise, because Bitcoin was created to be money of the internet. Like literally anyone can just download an app and start receiving Bitcoin instantly. So it's as simple as that. You don't have any KYC process. You'll have KYC process only for the onboarding side. If you want to buy some crypto from an exchange, a platform where you get some crypto, but it allows pretty much anyone with just a simple QR code to receive funds. So it's a really good way of basically in these countries to transact, and also for younger people that don't have access to a credit card but have a smartphone, for example, they can start using crypto easily.
Okay, so you talked a bit about transactions and you talked a little bit about investment, but what about like financing and lending? What's the link between what can be done there with cryptocurrency?
So that's a more difficult topic, even if you have lots of lending apps today, because on Ethereum, there's many ways where you can lend your funds and get revenue out of it. So it's on both sides. That you can receive lending in crypto, but you can also offer your funds for some lending and receive interests that are pretty high at the moment. And we call this decentralized finance, so DeFi in the space. And it's been emerging it's pretty big now. I would say that there's a few hundred billions that should be locked, let's say, on these protocols, as we call it. But as digital assets and cryptocurrencies are not, what you would expect in the traditional finance. So it's not in terms of loans, you don't have the same volumes as you would find in traditional finance.
Okay. So I think that one of the things that we hear often about cryptocurrency is the relationship to it being very volatile. And some people say that it doesn't have much of a future because of that. And I'd like to know whether or not you agree. I guess I can guess whether or not you agree or not, but tell me a little bit about why you agree or disagree with that.
So my view is that Bitcoin and cryptocurrencies are an emerging market. And as it is an emerging market with also limited supply, because this is what you need to keep into account, there's only going to be 21 million Bitcoins. So the more people are getting in, the higher the price is going to be. Today, it's only an adoption of 500 million, which leaves us a huge amount of growth behind, and institutions just started dipping into it. In my opinion, volatility is due to the fact that it's a really young technology and a young financial investment. Bitcoin is only valued at around 1,000 billion. So, it means that it's a drop in the pond in the ocean in the financial markets, because this is the market cap. So it doesn't mean, that there's 1,000 billion volume per day. But nevertheless, we've seen the adoption of ETFs in America that started this year, and we've seen inflows of roughly 20 billion this year. So it's showing that there is some institutional interest, and now they have a way of getting into it through Wall Street. So the good news is that institutional investors can get in. They started already getting in, and all of this is going slowly to decrease volatility of the asset.
Okay. And one of the other things we often hear about is linked to illegal activity like hacking. And it's interesting because a lot of the merits we hear on the other side are that it's a safe way to do things. So can you tell me a little bit about what's going on with that, how you can actually keep up with all the different security measures that you have to keep in place with something that's natively online and on the internet?
So there's two answers to your question. The first is the security aspect. If you look at the security aspect, you've got ways of securing your crypto and making sure that basically you're not going to get stolen. At the beginning, it was the Wild West. Now you've got Ledger, a French company that creates what we call hardware wallets that allow you to store your cryptographic keys in a kind of USB device that has a secret chip element. And you have your bank or exchanges that do custody for you as a consumer. So usually now they've got professional grade tooling, they've got pretty good security features, and you shouldn't lose your money if you only stay in these ecosystems. If you start wandering around, it's going to be a bit different. And on the other side, you've got, as you've mentioned, compliance and risk when it comes to AML or terrorism financing. What I've seen at Chainalysis in my previous life and the last reports is that this criminal activity in terms of percentage is going down, but in terms of value, it's going up, simply because as the protocol matures and as more funds are being moved through crypto, there is obviously the share is going down in terms of illicit activity, but since the amounts are going up, there's also a correlation between value being exchanged and illicit activity. This illicit activity represents 0.20% of all the funds that are transferred, so it's pretty low, let's say, and it's decreasing. There's a lot of governments are spending millions to fight it, and I think it's working well.
Okay. So what would you say are some of the trends in this industry that we've seen in 2024 and some of the things that we'll see leading into 2025? And I'd also like to know, after you answer that, if you could tell me maybe about one of the craziest ideas that you've heard in a way that someone or a bank, either an individual, could leverage a cryptocurrency.
So at the moment, you've got a lot of trends. You still have the kind of NFT trend, but I'd say that it's not dying, but it will evolve to something a bit different because there was a huge craze around NFTs. You could buy a small ape and kind of use it on Instagram or on Twitter as a profile pic. Some of these apes were valued like millions of euros at the time because there was only 10,000 of them. But this has evolved. I think a lot of people have understood that this is also a speculative market and it has even less value than like digital assets. Nevertheless, we've moved to what we call tokenization. And it's more specifically, there's something that a lot of people are betting on at the moment, which is called real world assets. So it's how do you tokenize a building, a house, using a crypto and redistribute the revenue out of it to the holders, basically, of your tokenized asset.
Okay.
And I think this has a lot of value because today, like, digitalizing property is something that's very difficult to build. And if you want, to buy a share of a property, you need to go through financial traditional mechanisms. But there it could be more instant, easier to share, to transact. Obviously, you need to be careful about what types of assets are behind it and is there really an asset behind, but large companies are diving into this field. And you've got DeFi, decentralized finance, that has been continuing its growth since the last 4 or 5 years, and it has an impressive growth and ingenuity. But I've seen some crazy stuff also in crypto. I mean, I've seen since 2012, it has evolved like vastly. At the time, you had some ideas, that were getting funding just because it was a cryptocurrency idea. And you had companies that were raising tens of millions because of the hype around it. But we have, some downturns also in the market that are really good for this because it kind of splits, and only the good projects, the one that are serious keep going. The other ones, they stop their activity or they die because they're not being used anymore. So people are losing money because they invest in some stuff that is more risky than the traditional digital assets, I would say. I've seen projects around artificial intelligence, projects around GPU that were related to crypto, but there was no value of really using crypto for these kind of products. And it means, that in the end, if there's no value and the use case is not well thought, it's not going to work.
Okay. What are some of the projects you've seen around artificial intelligence involving crypto?
So there's quite a few. There's some good ones and there's also some bad ones. I'm not going to probably give names, but you've got some that basically want to think about the way we're going to use AI and monetize the use of AI in order to kind of redistribute some of the funds to a whole ecosystem of participants, which could be a good idea because AI uses a lot of data and a lot of things that could be open source or not when it generates content. So we'll see what it brings, but I'm not convinced that by merging the two hot topics of the moment, basically it's going to bring a good idea.
Right. Okay. One of the other things that we sometimes hear when people talk about blockchain and crypto are environmental concerns. So can you tell me a little bit about what some of those challenges are and how people in the space are trying to work to improve them?
Yeah. So I would say that it's really Bitcoin that's concerned by this topic because of the mining behind Bitcoin. So today, when you want to, for the Bitcoin network to exist, you need miners. These miners are using some specific built machines that are computing a mathematical algorithm in order to solve a mathematical problem that will allow the creation of a new block on the Bitcoin blockchain. Today it creates billions and billions of hashes per second. So it means that you've got millions of machines worldwide that are only dedicated to generating Bitcoin. This consumes a lot of energy. Nevertheless, more than half of the energy that's consumed for Bitcoin comes from renewable energies. So, and most importantly, and I think a lot of people are overlooking this fact, is that when it comes to renewable energies, you've got the flow of the river, you've got the wind. During the night, this energy is not used. The electricity that's produced is not used, it's just wasted. And by being able to monetize this energy by mining Bitcoin, for example, it allows you to have a revenue stream during night also and value your assets more efficiently so you can invest more and develop. And I think it's going to help grow renewable energy. And this is why also, it's power of the market. If renewable energy is cheaper and it makes sense, then you're going to use it for a specific use case. And this is why Bitcoin has more than 50% renewable energy, because in the end, there's more value in using renewable energy for it.
Okay, interesting. So you mentioned the DBX study that we were part of about, I think it was the study that we did 2 years ago. And one of the stats that came from that was that people said that, actually a third of the people that we surveyed said that they are willing to trust the bank that gives them information about cryptocurrency, and also they trust the bank to act as an intermediary to invest in it. So I'm wondering whether or not that figure of a third of the people surveyed is something that surprises you, or do you think that it makes perfect sense in the context that we're in right now?
I think it makes perfect sense. If you look at the adoption of cryptocurrencies in Europe, for example, you'll see that France sits at around 11%. So more than 7 million people in France own crypto. And we're one of the more, traditional countries when it comes to investing in Europe. If you look at the Netherlands, for example, it's 15%, pretty much the same in the UK. The US, it's more than 20%. So, banks have a difficulty to understand what are the flows and where people are putting money when it comes to crypto. They don't have the tools in order to identify exactly what are the funds that are going out. So for them, it's very difficult to judge if there is a real, willingness from their consumers, from their customers to dive into crypto. And I think it's slowing them a bit down. Okay. Nevertheless, I think that, as you've mentioned, more than 30% of people want to go through their bank. It's because their bank is perceived as a safe place to host their assets. And when you hear about FTX that collapsed and lost billions of funds, when you see all the hacks that happen in the space, you want somewhere that's safe, where you can invest safely and where your funds will be guaranteed in a way. So going through your bank for a lot of people is a no-brainer.
Makes sense. So in terms of the software and the services that technology companies can offer these banks, what are some of the things that you think are the most important for us to offer banks so that they can then enable their customers to possibly invest in crypto?
Yeah. So I'll speak a bit about what we're building at the moment. So we're kind of building a crypto banking platform that will complement our core banking offerings. The goal of this SaaS basically product is to allow from the onboarding to the trading of digital assets, the custody of digital assets, and all the compliance and reporting requirements. We will have an end-to-end platform that will allow banks to offer their retail and perhaps in the future corporate or institutional customers basically the ability to handle and store crypto at their bank. So this is what we're building, and I think it's really important because when you look at retail banking, margins are very thin. You've got huge competition coming from Revolut or digital banks, and the standard retail banks, they need to keep their young customers, gain new market share, and stay relevant and continue earning money. And when you see that, just for France, I think the revenue in transaction fees from crypto has been around 500 million last year. That's still a sizable amount where some banks could tap in and basically get revenue out of it.
Okay. And what are some of the aspects of kind of like an enhanced or personalized user experience in the context of a product that could help banks that you would say are the most important things if a bank wanted to actually offer this kind of service to their customers?
So the difficulty today is that if a bank wants to offer a service like this, it's going to take them 2 to 3 years to build everything. Even ourselves, we're not building everything from the ground up. We need to partner with companies that are specialized in the field. So we've chosen basically the best in class, and we're aggregating and bringing them together in a single platform that has the end-to-end approach, as I've mentioned. And so our goal is really both on the UX, UI point of view, where you need to make it simple for customers. We're thinking about it in the same way that we do for stocks, for example, or in France we've got Assurance Vie, we've got this kind of ways of investing. And we're thinking the same way. How can we build a platform that's easy to use, that will help us secure funds of the customers, and that will have best-in-class reporting and compliance? So we made some choices. We're building, all the interfaces as we speak, and we're trying to have it as more user-friendly as we can. But we're still focused on the market that we have in front of us, which is people between 18 and 40 years old that are, let's say, the majority of people that own crypto. It's going to be difficult to have someone that's 70 years old manipulate this kind of assets because it's still something that's techie, at the moment, I would say. But it's going to change, and I hope, that we can expand this user-friendliness to more users in the future.
Okay. A question that's a little bit of change in pace or gears. I wanted to ask you about the digital euro. So the ECB is proposing this, and I wanted to ask you if you think or how you think that it's going to impact everything that's going on in the crypto space.
So my view on digital euro and cryptocurrencies, if you put them one against the other, they don't have the same purpose. Cryptocurrencies or crypto assets, they're really about investing, about finding a new way that's separate from governments. Because in the end, Bitcoin is an asset that's worldwide, that is not correlated to, let's say, euro, the dollar. It can be a bit correlated to financial markets, but in the end, it lives pretty much on its own. When you look at digital euro, it's kind of the new cash for the EU zone. It will be available to anyone. It will be spendable everywhere. It's really something that's different, but most importantly, there's no volatility on top of it. What is going to drive its usage is the simplicity to use, and it's going to be both online and offline. So I think it's a new form of payment that we will have in Europe that's going to bring a lot of value. And I think that we shouldn't oppose these two because in the end, they have different purposes, in my opinion.
Okay. All right, makes sense. So my second to last question for you is actually about people out there who are looking for reliable sources about what's going on in the crypto space, or advice that they can get, or interesting things or crazy ideas. Where do you go to get your information about all of this? What are you reading? What are you watching? Who are you listening to?
Yeah. So I'm kind of a Reddit user, so I wouldn't advise to go on Reddit for this kind of stuff. I would definitely advise you to go to CoinDesk. For example, it's one of the best journalism and real journalism venues where you'll find really good articles. You also have Cointelegraph, which is kind of, I would say, the second in the field. And these are the two newspapers that I follow when it's related to crypto. When it's about what people, basically, it's a bit difficult because I don't have the same views, obviously, as a lot of these people. In France, we have someone that I like, which is called Hasher. And he's kind of, he's doing podcasts and YouTube, and I think he's got like 700,000 followers on YouTube. So he's starting to be pretty big. But you also have Michael Saylor, who's the CEO of MicroStrategy, that explains a lot about it, and Andreas Antonopoulos, one of my favorite guys. And he did a lot of videos early on Bitcoin to pretty much explain what it's about. He described a lot of things that have happened in the past. So I think it's a good way of understanding what crypto is about.
Okay, good. Thank you for the advice. And the last thing I wanted to ask you is, what would you say to all of the naysayers, the people who are still on the fence, the people who think that investing or maybe building something for their customers about crypto is not a good idea, the ones that are hesitant? What would you say to them?
So I think it shifted also a lot, because when I started in crypto, everyone was against it. It was really, but there's been a change of mind, I think, in the last 2 to 3 years with the last bull run. We've seen more and more people dive into it and try to understand it. The thing is that it's a difficult concept to understand. Thinking that money can be a private matter is something that was the case in the past. Like in the past, we've had private-owned money, and we've had public-owned money. And today we only have public-owned money because the ECB or the different central banks are the ones that handle funds for us. And I think that to the naysayers, to the people that have never dived into crypto, because I think this is the thing, they never tried to understand. They've only seen, there's been some hacks, people are losing funds, people are investing, losing money. Okay, but this is just because some people are just diving into something they don't understand. They're not committed. They just want to make a quick buck. It's the same as trading stocks. Crypto is as volatile as trading stocks. You can lose 90% of your investments everywhere. It depends on the level of risk that you want to take. So if you don't think Bitcoin is something good or crypto and it's not interesting, just try to understand it. Just give it a shot. And I'm sure you'll find something that's different than what you envision or imagine.
Okay, great. Thank you so much, Alexandre, for joining us. It was a pleasure.
Same. Thank you, Maya.